Good afternoon, everyone. Welcome again to another COVID special value series. Today, we are going to discuss with Vineet sectoral opportunities for investments post-COVID-19. What is investments? How do we go about it? We will understand more in detail from him. Good afternoon, Vineet. Vineet?
Yep.
Okay, good afternoon to you.
Good afternoon.
Okay, welcome all the participants. We would like to tell you that while we conduct this live webinar every day with subject matter experts of financial world, it's our way of showing solidarity with others who are fighting the COVID calamity. Thank you for joining us in this fight against COVID. Like I said, today we are in discussion with Vineet Rai, founder and MD
Thank you so much.
of Agristar Group on opportunities for investments in various sectors. So I think he has invested a lot, and I think we will learn from him what are investments, how do you go about it, what are the soft sides of the investment too. So let's discuss with him and sort of demystify all about investing. So we have been talking about of the new normal, right, in business. The same is happening in investment. Do you know that by 2022, Amazon, which is basically a business in retail, will surpass established players like FedEx and UPS in terms of delivery of packaged goods. Okay, so that's a change. People who are in one business need not stay in the same business. They invest in another type of business which may be complementary to them, and they kind of make a good business value there. So before anyone takes decision in investment, they should look at what is the return on equity perhaps, and what is the debt or money that he has to lend into the company. There could be many other countless variations. All investments perhaps lead to these two foundations. So let's go get to know more about investing from Vineet, who has successfully carved out a major business enterprise with just $100 in his pocket. Okay, he has a massive business enterprise setup with just $100, and that requires confidence, vision, and most importantly, risk-taking ability. So, what was it, Vineet, that inspired you to invest your time and money into a business?
Well, I think you mentioned all the good things, KK, but there are some other things that normally are not considered good, but that also actually work in helping people to become entrepreneurs. Lack of experience, not understanding the risks, very naive, not knowing the space. All these things actually worked for me. And I think a lot of people, and that's why sometimes it's easier to become entrepreneurs when you are younger. Simply because the liabilities, your ability to understand between what you will lose and what you will gain is just too flawed. And that allows you to do things that you never thought you will be able to do. I think there is something else which goes beyond naivety, lack of experience, as well as risk appetite, etc., which is where is your problem statement coming from? And in my case, my problem statement was coming from the background that I had. So while I'm a forester by training, and therefore I should actually be doing forestry and figuring out why tree grows and why animals or birds actually live in a certain kind of forest. But because of experience, because of chances, because of the way things turned out, I was from forestry moved into enterprise building at very early stage. And by the time I was 29, I was trying to figure out why is it that poor people want to become rich. And so I was actually not trying to become an entrepreneur myself. I was trying to solve a problem. And my problem statement was slightly generic, quite absurd actually if you go back to 1999 or 2000 when I came up with the statement. And the statement was, at that point of time, I believed that almost all the people in the not-for-profit world romanticized poverty. There seemed to be a virtue that was seen in people who are poor. It's a romantic angle which is still not gone away. So I actually still see and hear people talking about, oh my God, their poor people are more giving, they are nicer. This is actually how we create myths. And I was trying to understand if poor people are nicer and better and etc., then they would want to be poor only. But every time I met a poor person and asked them a question, why do you want to be poor? The answer was, but we don't, I mean, are you poor? Are you happy being poor? They wanted to actually be rich. And that was completely different from what I was hearing from the experts. And so I started trying to find out how do people become rich. And it seemed to me that for people to become rich, you need to do some kind of business. At least that's what my naivete told me at that time. And then I realized, so how do poor people become rich? And it seemed that poor have something to do with the business. They might become rich. And then I tried to study business, and business looked like consists of people who have ideas or capability to do work, and those who have money to help them do work. So there is capital and there is talent. When they come together, they create business. That was my simplistic understanding of what it was. Now, this is not a simple business. So it's not like buying a pillow and selling a pillow, buying vegetables, selling vegetable, and trying to solve a supply chain. I was trying to come from a philosophical angle. And because I was coming from a philosophical angle, it was impossible to see anybody else trying to do it at that point of time. And given nobody was willing to do it, and I had a certain idea, because of my lack of understanding of the context, the reality, the complexity, and of the change, and because of my young age, I was able to take the risk. And I think because I took the risk, I was able to start. But that did not define success. Success actually comes if you take the risk, you find an idea, you start, you assume and go with the assumption that your chances of failure are 99.99%. And only 0.01% is the chance of your success. The only way you will succeed if you continue to plow the furrow for a long period of time. So it's not just about actually having the right idea, starting up, and then chasing through. As I could imagine, it was a very, very challenging task to try to earn money. And the only reason I became successful was because I did not give up easily. Had I given up earlier, probably India would have not been even in the picture on the impact investment side. So a lot goes on whether you have the ability to stay on course. Now, there is a difference between staying on course and being bullheaded. So if you have a wall in front of you and you think that because you are very committed, you will use your head to break the wall and you will keep walking in the straight line, then let me assure you, you are not being persistent, you are being bullheaded. There is a difference. If I see a wall in front of me, my job is not to use my head to break it. My job is to find if I can go across or around the wall. And I think a lot of people do not understand this difference of persistency. So I have seen some very smart people who were bullheaded, but not persistent. And bullheadedness, which I defined as trying to break the wall. So that is equally important. You need to figure out a way to go around the wall when you come across something that you can't break it, either with your skill or your capacity or your strength. That's actually equally important. The third thing that I personally did probably right was I very quickly understood that I was out of depth. My understanding, my knowledge, my capacity, my gray hairs at that point of time were all zero. The conclusion was quick to realize. And so I actually found people who were smarter, better, more polished, aware of the world. And I brought in the raw courage, the rawness of the idea, the enthusiasm, the youth, while they brought in the finish, the capability, the skill, the sophistication, the articulation. Arun Dias, who actually I think a lot of people on this seminar might have heard of, helped me actually initially. There were a lot of other people in Singapore, Jayesh Parekh, who now is advisor to Jungle Venture, Sony TV to India, Anant Nageshwaran, currently in Prime Minister's Economic Council. All these people played a very important role in giving me some level of shape. Praveen Gandhi in India, all these folks played a very important role, and I did not know any of them when I started off. So you have to find them, meet them, co-opt them, and then make your voice, their voice, your voice. So in a nutshell, if you ask me how I come this far, it was not because I had the best idea in the world. I think I had the stupidest idea in the context at the time. But A, I was persistent. B, I did not give up. C, I was willing to go around the wall if I found the wall. Fourth, I co-opted smarter, better, and more capable people than myself. And that's really what I was trying to do in the initial phase. Now, this is actually the phase for first 7-8 years where I was, you can call it the survival stage, which actually works for you. So this takes you to a certain stage, but then you have to keep changing as life evolves, and you have to take into account what is happening around you. So my initial success came from doing these following things. And in the process, I was also doing double hatting. So I was trying to run Agristar and I was trying to run Intellicap, both at the same time. Agristar was the funds, Intellicap was a consulting advisory company. And we saw initial success by 2008. We were reasonably successful, given the size and context, in both the sides. Early success, but we were successful. I think the real challenge starts after you get the early success. And I'll stop here. And, you can probe me further.
Sure, sure. I think that was interesting because most people would think ROI is perhaps one of the most important factors. Yeah, true, it is. But I think you have kind of said, no, that's not the only factor. There are so many other softer sides of investments, and those also have to be looked into before you say you want to invest and become somebody big like you have done. You brought about this aspect of entrepreneur into this. So would you be able to tell what's the difference between investor, entrepreneur, and say incubator? What is the difference between this, and what are and should be the thought process while investing for each one of them?
So I think, again, I'm actually trying to see a person who's starting an incubator, a person who's trying to become an investor, whether you are an angel investor or a VC or a PE, whether you're looking for a job or you're actually trying to start an enterprise, and then an entrepreneur. So let me actually start from the entrepreneur. Who's an entrepreneur? A person who has found a question that is deep enough, that needs a resolution. Now, it's very different from what most entrepreneurs do. They come up with a solution and they think, and then most of them are searching for a question after they have found a solution. Now, if you are one of those entrepreneurs, let me actually remind you, at some point of time, you will run against a wall that you won't be able to find a way to go across. So an entrepreneur who has a solutions looking for a problem is an entrepreneur doomed for failure. You may actually be able to read your first round, second round, because you're smart, articulate, vivacious, whatever. But let me assure you, you'll never be successful. So the right way to go is find a good question and trying to look for an answer, and find a question that is deep enough that other people have not tried to solve, or have tried to solve but not failed, or have tried to solve and created a suboptimal response. So if you find a question that is deep enough, powerful enough, and you have something new to offer, then I think you, as an entrepreneur, will become successful. It doesn't matter what the investors or incubators tell you. So that's actually the most important point. Entrepreneur is the focal point of all conversations. So maybe in the hierarchy of resources and capability, you are at the lowest, but in the hierarchy of intellectual capability and ability to take risk, you sit on the top of the pyramid, and you must acknowledge and appreciate and understand that. So that's for the entrepreneurs. Now, who is an incubator? Now, the idea of incubator, and I actually was part of IIM Ahmedabad when we came up with the first paper on incubation as early as 1997, 98. And I also set up probably India's first incubator. I'm not sure there was any incubator at that time, which was in link with IIM Ahmedabad and government of Gujarat. At that point of time, we did some research to find out what are incubators, and generally, what you came across was space incubators. Incubators that provide you space, etc. And 80-90% of what you see in India is space incubation. You offer space, you offer a little bit of money, you offer some level of screening, you offer some level of mentoring. Now, I have always looked at that model and wondered, is there any real value being offered? Because the incubator that I started, I very quickly realized my job was to help rural entrepreneurs convert their ideas into investable enterprises. These were crude ideas, so I was actually going through a significant amount of discussion around trying to make them into real businesses. Just to give you an idea, tilting bullock cart. Now, how do you convert a crude tilting bullock cart, one piece made by a farmer in Amreli, into a 1,000 units selling enterprise? That's really the problem I was facing. First question was, why do you need a tilting bullock cart? Figured out, you have to actually put fertilizers. Human beings, women and children, they take things on their head and then go and spray it in the furrows that have been created by a bullock. That seems to be very inefficient. So this guy came up with a bullock cart, which has these 4 furrows, and you need to actually keep tilting it so that the fertilizer can fall into the furrows correctly. Now, this was the idea. Now, people will say there are hydraulic tractor, etc., but not everybody can afford a tractor. Tractor penetration was low. I'm talking about 97, 98. So this gentleman came up with the idea. We looked at the cart was brilliant. Now, when we started looking at issues, the cart was 48,000 rupees. Nobody in India and villages were willing to buy a 48,000 rupee cart. So we figured out the cart should be 25,000 rupees. Okay, so if the cart has to be 25,000 rupees, you need a designer, industrial designer, to come and look at the product and reduce it. So I went to National Institute of Design, got to a designer who actually then looked at the cart, reduced the weight of the cart significantly, changed the dimension, changed many things to reduce the cost. Then we actually went to a manufacturer who was able to actually come up with a design, etc., which can then multiply. You can make multiple carts and not every cart individually. So you need to spend a lot of effort in creating an idea. That was what we were doing. In today's incubation, an entrepreneur applies with an idea. We evaluate that, we take it in, and then the quantum of investment that the incubator makes is almost negligible. Yes, there is some mentorship, some general gossiping, talking, discussions, etc. And therefore, there is a massive disillusionment between incubators and accelerators where entrepreneurs go, because the capability of the enterprise to offer services that entrepreneurs need at an early stage in one place is limited. And that actually, I think, is a challenge that most incubators are facing. So if you really want to start an incubator, you have to think way beyond the space capability and see other than space. So there was a WeWork model where you are actually effectively taking a very large space and trying to make money out of breaking it into small spaces and offering value-added services along with it, which are really not improving the business, but actually taking something away from the business. I think real incubation is when you can add something to the business from wherever it is to an entrepreneur. Physically providing space, in my view, the best way is let the entrepreneur be where he or she is and provide them support there. Third part is the investor part. Now, who is an investor? Investor, generally, if it is an individual angel investor, is probably coming with an experience. The person, let's say, KK, you want to be an angel investor, you have earned some money, you have gained some experience, and with money and experience comes confidence. So you want to actually help and you want to give. Now, the desire is to give, but when you are giving, you want to actually partake in some way. And of course, the person who is taking the knowledge from you also wants money, because just knowledge doesn't work. So a lot of people who are mentors get disillusioned in India, because in India, most people think just free advice works. Unfortunately, free advice with nothing concrete mostly does not work. And that's why mentorship, despite being very important, is not taken very seriously in India, unfortunately. So there is a significant amount of unfortunateness about it, but that's how it is. So the critical part of an investor is the investor has a thesis. So for example, KK, you might have a thesis that, okay, I have done this. I have been in lending space. I would like to use my expertise or knowledge to provide somebody who's starting up how to do what to do in lending space. And it could be in risk, it could be in management, it could be finance, it could be accounts. And you also want to participate in the early stage risk taking. And that is what an angel comes up with, an excitement of participation without taking full risk on yourself, a small amount of capital contribution, and then helping and guiding and participating in the enthusiasm of somebody else, trying to, in some sense, taking reflected glory of being an entrepreneur without being an entrepreneur. Some of you have probably been an entrepreneur. Some may want to actually support, and others would actually just, who did not want to be entrepreneur themselves, wants to live through an entrepreneurial journey by participating in through an angel network. Then comes the venture capitalists. Now, venture capitalists are interesting human beings. They are actually folks who are supposed to look at an idea and try to, in some sense, bet on the idea. Now, the moment you get into an idea, it becomes an incredibly difficult thing. So most of us then takes a thesis position. So somebody will say, okay, in India, product-based innovation in entertainment may be more ideal than something else. So you can come up with your own thesis. For example, in Agristar, we came up with a thesis long back that microfinance is the business of the future, or agri-tech is going to be the business of future. So you come up with a thesis, and then you start looking or encouraging people who are working on those theses. So generally, if you as an entrepreneur are trying to reach out to a venture capital fund, you need to really ask yourself, is this the right guy for me? Because they have a thesis, and do your application fit into the thesis? For example, if you apply to Agristar and you are trying to, let's say, make cosmetics and sell them in a certain way, which is viral and can scale up. Now, unless you can demonstrate a reasonable amount of social impact coming into it, Agristar may not find the idea very appealing. But any other venture capital fund that is focused on new products or branding, etc., is focused on branding or a brand product that is being launched, might like it. Or if you are doing cosmetics using herbal products, and therefore you are creating some sort of intellectual property in the process, and therefore you have an edge to the market, somebody else or even Agristar can look at you in that case. Similarly, if you have a solution that has significant technology component, maybe an institution or a venture capital fund with a very strong technology thesis, a Sequoia or an Excel, or SciF might be actually the right institutions to approach, or a Chirate for that matter. They are the right institution to approach. This does not mean that you should not approach an Agristar. But the thesis of Agristar is impact first, technology important, because expansion and scale comes from digital transformation of the business. And therefore, we look at both of them together. So if you have both of them together, you have highly likelihood that you might qualify with Agristar. But if you have significant technology, very little impact, then an Excel and a Sequoia and a Chirate will be far more amenable to your idea. So this will be the three different ways I would actually define the approaches.
Well, thanks. So we understood what's the investor and entrepreneur and incubator. So I'm sure many would want to know who is Vineet. We know that he is a great incubator, but to me, he looks a gray shade of investor, entrepreneur, and incubator. Can I say that, Vineet, that you have shades of all three?
Well, it's difficult to say. I've gone through those journeys. Does not make me good at any of those things, but I have lived through those journeys, so you can say that.
Excellent. Yeah. So before I go to the next question, two observations, please. Number one, we want to tell everyone that besides being live on the CPS platform, we are also live on YouTube and Twitter. So Twitter is the latest handle that we have put in through. So these are three channels we are live, and we're getting a lot of good feeds from all of these channels too. The second observation is that we are open for Q&A right now. You can put in your questions. We try to demystify the entire investment, terminology and what all it comes. And I'm sure you can ask a lot of questions. So put in your questions in the Q&A, and I'll be able to take it across to Vineet. So my next question to you is, Vineet, you have been a successful incubator for many, many businesses. Give me some interesting examples, and what made you invest in these businesses as an incubator? You can pick up one or two good examples.
Okay, so let me actually start by picking up. So I'll pick up two examples. One is a company called Agristar, which is now probably India's largest agri-technology company. This was around 2013. Agri-tech was not exciting at that point of time. We were looking for ideas where we can find something new in the space of agriculture. Now, the gentlemen, these are two young gentlemen, one from a consulting background, one was actually working as a sales guy in Best Buy in US. So very odd combination to have. And they came up with a slightly a mixed idea. They wanted to actually service the farmer needs. They wanted to service the farmer need at their doorstep. And their experience has nothing to do with agriculture except a limited amount of experience. And they had a fairly interesting struggle journey in trying to do many things. Now, we tried to, so they wanted 50 lakhs from us. After listening to them for a couple of hours, we had an internal discussion. We decided that if we give them 50 lakhs, they will be very happy, but would we be happy? And second, how long will the 50 lakhs last? Our estimate was they will go bankrupt in 60 to 90 days from then, because rural India is difficult. We understand rural India well. Yeah. We did not know them very well, but they were articulated, smart guys. So we went back and offered them 4 crores. They asked 50 lakhs, we offered them 4 crores. They were initially surprised, then also worried that 4 crores, these guys are taking too much, etc., etc. Yeah. We said, we'll give you in 2 tranches, 2 crores, 2 crores. And then after we invested in them, soon they actually received an investment term sheet at a fairly high price for $5 million. Let's say within 6 months' time. And again, we had a discussion as to the incoming investor, what will they do? And how will they actually frame your journey? And I think the most interesting thing during that period was in the first 6 to 12 months, while they were trying to fundraise, survive, fight, and scale, they were also trying to learn how rural India behaves. So with our advice and some of our support, they were able to actually figure out what do the farmers want and then deliver that. So long and short of it today, just to give you an idea, this company has crossed 250 odd crores in revenue, growing at around 70-80% year on year, has 7 different investors coming from technology background, mainstream development finance institutions. Some of the biggest names, so 7 investors have raised around $80-85 million, so significant amount of capital, and is sort of an Amazon for farmers in India, just to tell you. Now, this company has the potential to become a unicorn in next 3 to 4, 5 years. They have done quite well during the lockdown because the needs of the farmer, Kharif season is coming, farmers have been asking for new products and services. They are using technology at a fairly high level now, supported by the technology investors who came in following us, and are doing brilliantly in terms of solving the first stage problem of taking product and services that farmers need at their doorsteps at a price point that is amenable to farmer, and developing credibility. Remember that farmers do not trust any company that goes, because hundreds of people go to them, try to sell them things, and then evaporate or vanish in thin air. So building credibility with farmers, they have an app now which has more than 1 million or 2 million farmers now, which is a significant number, even though the farmers in India is 10 crores. So we are talking about 100 millions. So they are at 1 or 2% of the number of farmers. But it's quite significant in what they have achieved in a very short period of time, both using technology as well as an outreach and building trust and credibility with farmers. So this is just one example. The second example is we, in 2012 and 13, before 2010 actually, to 2011 or 12, we predicted that in India, there is a different kind of challenge we are going to see, because every time we drove from Mumbai outside, we saw a Mount Everest in Devnar, which was actually a new landmark. This is because all the waste is being dumped outside. They call it, in India's waste is generally lifting and shifting. So people come, trucks come to us, take the waste, and they go and dump it somewhere. That dumping actually is taking place. It's called landfill, but is actually above the land now. And really not above the land, it is actually many 100 meters above the land. So it was very obvious to us that sooner or later there will be a big challenge coming. And if we can find an entrepreneur who can convert this waste pits into wealth, somehow, we did not know anything about it. So we started a yatra to search for entrepreneurs who are working, and we drove from Mumbai to Calcutta and back, trying to look, and we met some 17, 18 entrepreneurs of doing different things. Our premise or thesis was that we are looking for an entrepreneur who can convert waste into wealth, but he or she should not be selling the produce to the government. So municipality should not be a buyer. Government should not be a buyer. You have to actually be selling it to the markets. Now, how and what, we did not know, because that's not my job. Our job was, if we find an entrepreneur who can do this magic of converting waste into wealth, then we will give them money. And the buyer should not be government. Finally, we came across two young people in Ahmedabad who were doing something like that, but at a very crude level and at a very early stage. After some spending time, etc., and this is very, very early. So these guys were actually just buying waste from rag pickers and paying them a very ethical price, and then cleaning this waste and selling it to the intermediaries. So it was a very, very obvious. It was like literally like a kabaddi business.
Yeah.
We invested 3 crores, not 1, not 2, 3 crores. We thought this business can be very uniformly scaled. Now, this is where investors are always wrong. 3 crores we gave to these guys. The guys were young, smart, they got excited. They bought a lot of kachra, lot of waste. It's easy to convert money into waste, but then we soon learned it is very difficult to convert waste back to money. Now, waste actually requires specialized people who can clean and understand waste. Waste has very different qualities. For example, you have plastic, which is PET, PP, polypropylene. There are different weight categories, so you need to segregate. There is a lot of specialization there. We had no understanding of that. These guys bought a lot of waste. People were not found, and so there was a fire. There was a foraging unit nearby. A spark flew in, and our 3 crore became 3 kgs of ash after 6 months of investment. Now, what do you do? So now this is where Avishkar is different from other investors. We actually spoke to the entrepreneurs. We had lost everything. The entrepreneur said, we want to fight and we want to rise again. By that time, we had understood two things. First thing was that you cannot scale this business by doing what you are doing, because if 3 crores we have put in, 2/3 is already burnt out. And that is because we were trying to scale. How could you scale this? So our question to them is, guys, we cannot give you more money to do what we were doing. Can you do something? And when we met them, they were doing some 50 kgs or 100 kgs per day. And I put a very audacious number in front of them. Can you go from where you are to, let's say, 100 tons per day? That's a ridiculous number when you are dealing with 100 kgs per day. To go to 100 tons per day, and they have already burnt everything for going to 500 kgs or half a ton or 1 ton per day. So the first reaction was, that's impossible. I said, well, we don't know waste business, but you are entrepreneurs. Can you go back and think and come back and see, is there any way possible? And assume for a minute, God will provide whatever you need to do that. So assume there is no constraints. Anybody will provide. 15 days later, they came back and they said, we think it can be done, but this will be a significantly different operation than what we are doing. And by the way, you need to give us $2 million.
Yeah.
So after burning $500,000, after some degree of assessing their idea, we gave them $2 million more. And then I'll cut face to today. This company is processing 567 tons of waste per day. 567 tons of waste per day. Roughly going to be doing 300 crores of revenue in next 12. So there is some disturbance because of COVID, so it's difficult for me to, but as per the plan, if COVID would have not happened, they would have done 300 crores of revenue, going to 500 crores. And they are expected to go to 2,000 tons per day, only in few cities in India. Right now, they operate a 300-ton plant in Indore, 100 tons in Ahmedabad, where they started from. They are opening 100 tons, 150 tons in Pune, and then in Jamnagar and others, Jamnagar and Mumbai. So overall, we expect them to reach 2,000 tons in next 3 to 4 years, and they can reach 20,000 tons as well. And imagine that it would be a unicorn. It will be first waste unicorn in India. Its potential is not limited to India. It is actually, it can go to US, it can go to developing markets, Indonesia, Thailand, etc. And we got an international agency to come and study, and they found, and this is actually a very developed nation nearby, and the sovereign team came and said, that waste processing is 30% more efficient than anything they do where they come from. I'm not naming the institution and the people, but just to let you know that this team of people who in 2014, 2013 were doing something really like a kabaddi business have actually built a unicorn that is now the picture. This is the real core Swachh Bharat Abhiyan's poster boy as in today. So these are two examples that we have dealt with, which completely started from idea and have reached some level of scale.
Super. Thanks, Vineet. I think that was, good to know that people who were at the lower rungs have been brought up And yeah, sure, the pandemic has had impact and it continues to have impact in a lot of sectors. So my next question to you will be, what will be the impact of this pandemic on various sectors? And leading to that, again, back to the investment, according to you, which sectors are likely to attract investments during this period and post-COVID?
Let's actually start by saying or accepting that COVID is going to disrupt everything.
Yes.
The fact that it is disrupting national GDPs, international GDPs, global GDPs, the fact that a small company will not be impacted is not going to be wise. So it will impact everyone. 95 to 98% folks will be impacted negatively, but there will be some folks who will be impacted positively. Now, the impact, in my view, is largely going to be in the next 12 months. There will be continuous turmoil, there will be changes, but we need to also realize the stimulus package, which people have different views and different opinions on, has brought in a significant amount of liquidity in the ecosystem, which means there is a lot of money that is available. Now that money is available, however, those who are taking decisions about that money are extremely fearful. I'm hopeful that the sovereign guarantee, partial or full, might be able to help in releasing some part of that money, and that would probably ease some level of tension. But demand for the foreseeable future will continue to remain a questionable parameter to make a judgment on. So there will be turbulence, and we all will have to learn to live with it. I wrote a small paper saying that most of the push is going to come from rural and agrarian economy. And I think that currency is now gaining steam. You are actually seeing more and more people acknowledging that the change turnaround or the resurfacing that is going to happen is not necessarily going to come from the corporate world. It will not necessarily come from urban consumers. It most likely will come from rural India, which is quite large, 60-65% of the population, but contributes significantly less to the GDP. So even though it will come, the resurgence will come from there, it may not have the wherewithal in that sense to bring about a significant change. However, it will disrupt the way our districts, our states actually operate. My guess is COVID has allowed some of the backward laggard states like UP, like Bihar and Jharkhand and Orissa an opportunity to fight back and come forward. Because I genuinely believe the people who are migrating back, even though it's a very painful story of migration, they are some of the brightest and the best people that these states have lost out. These are skilled folks also. When they come back, they have the opportunity to build new businesses. They will take back some new ideas from the places they are coming from, and they will also influence the local economies. Now, therefore, all kinds of enterprises and business will do well. Last time, I think on this webinar, I mentioned about Argos, the warehousing company that we invested in on March 30th, which actually has seen an 8x higher growth. So what will happen in places like agriculture, in places like financial services, which is going through a massively turbulent time, but sooner or later you would realize that especially in places like microfinance and others, there will be a significant demand. So while there is turbulence, there will be a massive demand. And those who are well capitalized or those who are starting up, remember, not just well capitalized, those who start right now are also starting with a clean slate. They may have a chance to actually do quite well in the near future. Now, you will have to make your judgments. Where is the money going to go? Human beings by nature, when under risk, would actually cut down on discretionary spending. Yeah. So if you have money, you will not be spending money on things that you want to splurge. You will try to actually cut back your spending and you will splurge what is essential. So the businesses that actually meet the human essential needs would actually do well. Businesses that can actually transform to the new future, which includes social distancing, physical distancing, not being face-to-face significantly, will also do well. So for example, Zoom, on which we are talking, is certainly doing incredibly well. And so any kind of instruments, technologies that are evolving in the paces that will allow people to communicate virtually would actually do well in the short run. That's another thing that I would say. There are many other sectors, of course, obviously because of COVID, insurance that used to be a push sector is probably transitioning into a pull sector. Everybody is aware that the risk of losing your health, that if the world can come to a standstill, I can lose my job, I can lose my income. So better to take insurance. So I think there will be a transition in subsectors. Some sectors like hospitality, tourism, airlines will take a very long time to come back. Unfortunately, I don't think so there's anything wrong with them. These are very important sectors that should do well. Most of them will come back, but they will actually take a longer time and a very painful path to recovery. Most of them have already been pivoted. For example, airlines are spending more time on cargo transportation and have actually refurbished their planes to make them cargo planes. So you will have to actually pivot and see where the opportunity and start building well. But for most industries, it will be a survival time and you have to find opportunity. I think there will be a continuous mixing and matching of opportunities. I personally believe there is no sector which is a bad sector. The entrepreneurs will have to reimagine their sectors. I think the most important thing at this point of time is not to really look for sectors. Some sectors like e-commerce, logistics within e-commerce, they will all do well because suddenly the demand for e-commerce is going to be higher. People don't want to travel, don't go to malls. So therefore, a lot of those demands will come up. I think that's obvious. Everybody knows it. I will not spend my time. But to those who think they are in a struggling sector, you have to not run away from your sector. You have to reimagine your sector. And if you are able to reimagine, you might be able to add significant value to yourself.
Sure, thanks. So you really rightly touched upon turbulence and the pain of that almost every business going through. And so every business, I'm sure, is going through this pain of cash flows, profitability, survival. So that is something that is, I think everyone is looking at. How do I come over this? So my next question on cash flows versus profitability: how easy or difficult is it to do an evaluation of an investment opportunity in these uncertain times?
To be very frank, if you look around, a lot of investments that we make take a very long time to break even.
Yeah.
So I don't think so. Most of us who are investing early stage really are very concerned about profitability in the short run. What we try to do is provide capital to an entrepreneur and then actually see if the entrepreneur is able to use our capital to build the basics of the business rightly. And the most important basic that you're looking for is there a cost economics or a unit economics emerging in the business using our capital? And then you have to define whether it is the right time to grow or a right time to actually manage your business at a substantial scale. Now, generally, when somebody comes to an investor seeking an investment, that person should come with an ambitious plan because we are not in the business of creating bonsais. We are in the business of creating banyan trees. Whether we like it or not, that's the reality. So a beautiful bonsai in somebody's garden looks beautiful. It does not create exits and returns for investors. So for us, the important need is scale. Now, COVID has changed many parameters. So almost all of us are asking our entrepreneurs to rethink and not scale rapidly, to focus on unit economics, conserve cash, cut out all the things that you do to actually gain, look at efficiencies, and if needed, re-architect your business so that you can increase your runway. When you look at a new company and you look at a company that's not going to make profits for long, then you go to your thesis. If your thesis is to invest in a business, for example, my thesis would be, can I look at a business that can find a pivot that can create value? For example, online e-learning companies are certainly doing very well. So if I'm interested in education, I would probably not look at brick and mortar companies. Even if they are safe, I would actually look at an e-learning company. I think this is a very basic example I'm giving. I can give you a more complex example, but just to give you that when we will look at it, we are actually not looking at a short return. Also remember, the profitability of the company is important, but the growth of the company actually fetches it investors, following around investors. So my return on investment actually does not come from the profitability of the company, specifically if I'm a early stage investor. It comes from the value perception that the forthcoming investor is seeing in the growth rates of the company. So growth rate is far more important than the profitability of the company.
Okay, I think that's great. That answers my query whether to ask you a direct question. Would you be would you be investing in a loss-making company? And I think you have said it very, you already answered that question, that you are looking at.
I have never, till date in my life, I have never invested in a profit-making company. So.
Okay, that's good to hear. So, Vineet, I have a question to you from the participants. This goes that since the world of financial services, banks have been delivered a body blow to a large extent. Hence, what are the new emerging opportunities in financial services, stroke banking, not standalone fintech, in rural and urban India to cater to the new normal, which has the element of impact too?
So I don't think so that one should actually see what has happened during COVID as a body blow to the banks. I think it's for them, it's just a temporary glitch. Of course, the glitch is because they receive a lot of money from us, people like us, and then they give this money to other people to create an asset. And those assets are wobbly right now because of the balance sheets coming under stress, business not going on, earnings coming down. So people are either earning less, and therefore there's a cash flow mismatch that will come through. And those cash flow mismatch will lead to write-offs, etc., etc. Maybe for a month, maybe for a year and a half, most banks' bottom lines will be stretched. It does not mean that the business model has been challenged. However, if one has to look at in financial services, I think one can look at many opportunities to look at. Every opportunity right now is under stress. So whatever I'll tell you will not be under stress. So that's the first premise. I don't think so I can give you an answer and say, this is a financial services will do well. But if you actually know how to finance the migrant who has gone back to the state and help him or her build an enterprise there in the state, if you can figure that out, then you have probably a very impactful business that will change the demography of this country. It will change the economics. The economics today is you can draw a line from north to south, and there are two parts of India, one which is the leading India, the other is lagging India. You can actually transform that. So if anybody who comes up with the idea that can convert the migrants who have gone back into worthy customers, can build their own enterprise in the geographies that they have gone, you will actually change the fortune of India, not just your own fortune. A simple example, but a tough one. But if you can crack it, whichever way, you can come up with a virtual incubation plus virtual investing or virtual lending platform. You can come up in any which way. Fintech is just a nomenclature for using technology to find a worthy borrower. But here, these are very, I mean, if you are a migrant, you must have been a hardworking, audacious, visionary guy to leave your state to walk back. And if this guy has walked back 1,000 kilometers, that person's guts is actually just amazing. Can we find a way to convert them into productive assets for yourself? And if you do it, then you will become a very rich person using financial services.
Okay. That's a good tip to many of the participants. So you can look for investment in those areas, perhaps. Vineet, we are like facing a lot of uncertainties, right? What are we have? We have this pandemic, we have this social distancing, you have cure for epidemic likely to come. We don't know when. You are also hearing the second wave coming up from various quarters. So it's like a dismal thing. We don't know. We are in a stage of uncertainty. So in this uncertainty, what can be the premise or outline of business investing in such a backdrop? I mean, do you think investments can take place in such a backdrop? Or do some positivity somewhere?
What I can tell you is investments are taking place, but right now what all of us are doing are putting more money into the companies that we have given money to. Not because of we don't want to give money to new people, but at this point of time, you would want to give as much money as possible because of the reason you highlighted: uncertainty, lack of surety. So we don't know where the world is going. We also don't know whether the money that was sufficient for 9 months is sufficient for 3 months now.
Yeah.
The quantum of capital that you give and the quantum of capital you are reserving, significantly higher than what we would do during ordinary circumstances. It does not mean that there is no capital. There is a lot of capital right now. But because people are fearful and people are unsure, people are looking for examples where you actually can see a potential positive coming out. And there are deals happening, and some of those deals will get announced soon. So I think there are opportunities dime a dozen. There is appetite, but in such times, normally we ask, and most people advise you to lie low for 3 to 6 months. You actually wait for the tsunami or the Aandhi to pass over you, so that you can rise and then see when all the dirt and filth has actually gone away. You will see what is there. At this point of time, trying to make investments when you are blind is not the smartest thing, until unless you have deep expertise and great confidence in what you are doing. So to investors, be cautious, wait your time. To entrepreneurs, extend your life survival instinct. Try to survive till September to December season. You will start seeing a very significant change in the behavior of people between September and December.
Okay. So, like I said earlier, participants, please put in your questions on the Q&A, and I can get across to Vineet your questions. Let's look at another aspect of investor, which is the dynamics of investment varies from country to country. We know that, right? What is good for India may not be. So what are the investments sweet spots in India? What you think are different from other countries?
Well, let's actually try to think about what is changing. And what is changing is, if you take our behavior. So I think it's less about country, it's actually the consumer behavior change that is taking place. A consumer behavior change that would have ordinarily not happened. I mentioned to you, insurance from a push product is becoming a pull product. It's a massive consumer behavior change, simply because of the fear that COVID has brought to us. Now, I don't have an evidence to say that insurance has become a pull product already, but whatever little information that we have based on our diligence, we are seeing a fairly significant positive rise into those guys who are actually in the space of insurance. Now, that's actually a behavioral change. We also know that a lot of e-learning companies are raising significant amount of money. Why? It's simply because the brick and mortar companies are not making money, so e-learning companies are making money. Zoom is actually doing well. So there are lot of new companies which will come in with more innovations around conferencing abilities, because that is an area that is now suddenly, how many of us even knew Zoom 4 months back? Right. Today, everybody is an expert on using Zoom. So that's actually a behavioral change that has happened. Industries that will guaranteed see a fairly significant fall is actually real estate, especially the commercial real estate where offices, because people are going to cut down. Suddenly, we have all discovered work from home is not such a bad idea. It's not a bad thing. It's possible. You can manage it. Travel and tourism will continue to suffer for some time, but that's an industry, in my view, will come back, because they will come back with a vengeance also, because people are struggling to go out. So when they will go out with a vengeance. I think healthcare industry, healthcare infrastructure, because of COVID impact, will see a significant amount of investment. There is a belief that those kind of capabilities would continue to actually attract significant traction. I think the stimulus package, the way it has been designed, will also actually spur a significant amount of capital following it, given that you clearly see a policy alignment there. As I always believed, and I continue to say, impact investing and those who are working on migrants, laborers, lower income class, etc., would see a significant impact coming from the capital providers like us, because I genuinely believe the global pool of capital is going to take its decision very differently. And that decision making is out of fear of COVID. I think they have realized that the world needs to be handled far more cautiously, and therefore we should actually make sure that the capital that we are putting in is not doing damage to the world. And if that thinking comes in, it will lead to a significant amount of capital flowing into impact industries. It will also reduce allocation of capital to extractive industries that actually take things out of nature. So these are some of the predictions that I can make.
Yeah. So you think protectionism will be a factor in the days to come? Like each country would like to preserve, being more local than being global?
I think world as a village concept will go away. World as a village will go away, which means you can just fly wherever you want in 1 second. That will go away. But I don't think so. It is going to actually be a world that is not going to be global. So what you will see is movement from a globalized world as a village to a global local thought process, where people will try to play in the supply chains of the global economy, but try to strengthen their own local participation in that. Yeah. And that actually, so I think we were already seeing some level of tax regimes coming in, some level of defense coming in terms of global trade with the China-US war that was going on much before COVID came in. But during COVID, there is a very clear realization that you cannot see China as the only global manufacturing hub for the world. And that really means a significant realignment is going to take place. And that significant realignment means that every country is now concerned to some level of capacity in all areas. So that specialization in one area. So we are going back from some sort of a monoculture, and I'm using my forestry nomenclature, monoculture to actually a ecosystem-based approach. That you understand specialization is important, but specialization is not so important that you actually completely become defenseless. And that thinking is very different from if China produces at the cheapest rate, then we are fine, everything should be produced in China. That thought process is being challenged now.
Yeah, excellent. Thanks. So, we talked about investor, and what are the factors he should look at when perhaps for investing. So while we looked at the entry side of it, let's look at the exit side of it. Name some couple of factors he should prepare himself for an exit if you feel investor should do this planning of entry and investment and exit.
The interesting part is investors always plan for exit. The problem is investors planning for exit does not get him or her exit. The exit only comes if the entrepreneur plans for an exit. And invariably, the entrepreneur don't think exit is their responsibility, even though the documentation says completely something else. So generally, if you are an entrepreneur and you're starting or you're trying to raise capital, you must think about how do you give exit. Now, thinking about giving exit is itself a very, very big positive step. You may not understand an exit. You might have never done an exit. But to actually hold yourself accountable for taking the money that you are taking in order to build your business, if you think you have to return that money, it will keep you accountable. A large number of entrepreneurs do not understand the meaning of accountability towards equity capital. They understand debt capital, but they don't understand. Most entrepreneurs think equity capital like grant. Unfortunately, it is not. It comes with control, and it is a very demanding capital. It's an expensive capital, and it will ask for an exit. And if you have not thought it through, you will run into the foul side of investors. Exit thinking is a complex thinking. So if you don't think about it for 5 years, 7 years before the exit time arrives, you will be in a difficult situation.
Yeah. So do you think that there is a market now that some of the companies, unfortunately, may want to kind of wind up because unable to face the turbulence? So you think there is a marketplace for investors in such a market?
So I think M&A, you will see a significant amount of M&A and hiring, so which is acquisition hiring. Effectively, what you do is the company, this company is dying, but it has talented people. You want to pay a small amount of money to hire the team. So those companies who are in early stages have collected a good amount of quality of team and do not see a future would get hired, which means the entrepreneurs will not really make much money. The investors will lose out all their money. But the people will have new jobs, probably not as well paying, but they still have jobs. There will be some acquisitions also at very low prices, because generally right now there is bottom fishing going on. Everybody is looking at acquisition as a bottom fishing activity. So those kinds of things will continue. I think if you are a struggling company, you should reach out and talk to as many people as possible. You may not be able to make a significant amount of money, but you will be able to save a lot of jobs if you are able to find a good nesting place for yourself.
Okay, right. So we come to almost the end of time. If you permit, can I extend it for another 2-3 minutes?
Yeah, that's fine.
Okay. So personally, Vineet, you have invested in remote and far-flung areas of India. Would you like to look at investments in areas such as, we call it as risk locations? There are a lot of risk locations in India itself. Would you venture out there?
Yeah, we have already done that. So one of my companies we invested in when we launched the plant, it was in the Naxal infested area, and two Naxals came on a motorcycle and used an AK-47 to make a cross on the goods. So we had a video recording of that message that was sent to us as well. But that's in part and parcel of life. I have actually worked in Naxal area, so I think once you make a choice, the risks are part and parcel of this thing. Sometimes the risk are of actually doing simple business. Sometimes the risk is of losing your head. But risk is a risk. Life, limb, and livelihood all are at risk. Like the migrants are actually going through right now.
Yeah. Okay. Okay. Right, Vineet. You take care. I would, generally we have a question to be asked, and I think Mani, please unmute yourself and you can go ahead and talk.
Thanks, Vineet. I just wanted to be wish the first show was conducted basically in this webinar series of Viewpoint series by Mr. Kasa Sudagar. He's on the show. He's attending your show, and today is his birthday. So we wish him all his birthday. I wish you also basically say
happy birthday.
Everybody listens to it. Can you just say, wish basically Kasa Sudagar, who is also basically advisor on EPS, a happy birthday to him.
Happy birthday. Happy birthday, Mr. Kasa Sudagar.
Yeah, Vineet, Penny from your side.
Happy birthday, Mr. Sudhakar. I actually have already wished him.
Oh, I see.
I wished him before you spoke. So.
Okay. Thanks a lot. That's it from me. Thanks a lot, Kumar.
Thanks, Vineet. Once again, another wonderful session with you, Vineet. I mean, there's so much to learn from you. And I think we traveled so many parts, so many subjects, subtopics in investment. We went from investor to entrepreneur to angel investment to incubator. And I think it's been a wonderful session with you. Thank you so much for coming once again. And we look forward to talking to you in the near future. Thanks once again. Thank you, everyone.
Thank you.
Thank you.
Yeah.